Hello and welcome to Scrolling with Ceazor. Today is March 25th, 2026. Now, we've got a lot of tweets for you today. Some good stuff, some bad stuff as usual. A lot of philosophical thoughts out in Twitter space these days. Now, as you can see, the chart's looking a little tiny bit green, but as always, this is not financial advice. This is my own biased opinions based on the news that I see and a little bit of fiddle playing. So, taking a look at gold, gold has recovered back into my range. I did move it down a little bit, but I wish I would have seen this chart yesterday and moved down to there. So I did adjust my range a little bit wider, so I'm back in here getting some trading fees at least. Yeah, so gold kind of has recovered, and there is something on Pharos that I want to talk about here. So it says here, gold reversed its negative 150 million days to 30 in a single day mint. So basically there has been gold-backed tokens are pulling back in the opposite direction. So basically there's been more gold being minted, more gold stablecoins being minted versus USDC, which has lost. So the reason why I've jumped over to that to talk about that is I want to talk a little bit about these gold stablecoins. I really like them because they're on chain and I can put them in liquidity pools. I can trade them. I can do things. I can use them as collateral. This kind of stuff. I really like this idea, but I don't think the gold stablecoins have the ability to even even slightly change the price of gold. Like if someone were to dump a massive amounts of gold stablecoins, the gold price wouldn't be affected at all. Obviously the stablecoins price here in the liquidity pools would be affected, but no one's gonna dump gold down to let's say $2,000. No one's gonna dump their gold stablecoins down to $2,000 when they can redeem them, right? Someone who has that many stablecoins to make that effect on the pool would just redeem them with whether it be Paxos or Tether, right? I would think. Or if someone did dump it, then someone would quickly come around and mint and buy them back and redeem them for it. So the peg would be defended quite aggressively, I would think, because gold, the actual price of gold in the real world, is not going to be affected by crypto at this point. Okay, it's a pretty stable asset, I would think. Okay, now can you get liquidated using it as collateral? Of course you can. However, I do think any large wick candles are going to quickly recover because Tether's just going to be like, thanks for the free money, and they're going to buy it back, or some whale or something like that. Okay, so anyways, I wanted to kind of mention that before I move on. So then let's take a look at ETH. ETH is kind of in a decent position here. I think it's doing okay. BTC is looking almost identical to ETH in the charts. As you can see, they're still heavily correlated. Okay, so let's move on to Pharos's little talk here, and we'll read through a few of these things. So USDC lost 800 million. So basically, Tether announced that they're going to use the third-party auditing to help with their their backing and the audits of their holdings at Tether, and as a result, I think people have increased their confidence in Tether and have kind of maybe some people redeemed their USDC and went into Tether because Tether is the dominant player, and Circle has also had that huge amount of dumpage on their Circle coin, so their actual governance coin, or their governance. Well, I guess you can't call it a coin, right? But their stock, right, dumped like crazy. Yesterday I saw that Kathy Wood front ran the dump, so somehow she knew it was going to dump, or she suspected it would dump, or she had a premonition. Anyways, I'm all good with that. Insider trading's everywhere, so just let it go, I guess, to some extent, as long as I don't get totally wrecked by it. Dragging. Let's see what we have here. Pax Gold posted 31 million of net inflows, so lots of gold stablecoins coming in. I just wish I could find a way to get them to be more interest bearing. Maybe I'll look around a little bit deeper to see if I can use them as collateral somewhere and then use those as liquidity pool tokens. Stress below the surface. Dues band distribution shifted to 74. Calm yesterday to 66 today, with a watch climbing from 60 to 66. Let's see if we have any. GYD is at alert. USDA at alert. Lots of stablecoins. RLUSD dumped 40 million in a single day. Let's see. I wanted to see those blacklists if they were here. I heard there was a bunch of cautious gauge 69 blacklist events freezing. Yeah, it doesn't show the ones. So yesterday I saw a tweet. I wish I would have saved it. I couldn't find it this morning. But so basically, USDC they never tweet. Oh, it was Zach XPT who tweeted about it. Yeah, so they never blacklist like when people hack and use USDC. They never react to these. Like it's an obvious hack. And Tether's pretty good about like jumping in there and blacklisting and freezing those coins, but Circle doesn't. And then Circle the other day, they blacklisted a whole bunch of like companies just for like a private claim, like some sort of like civil court dispute, and they blacklisted a bunch of tokens for this reason. So I feel like, Circle's very like, they're not of the same ethos of me and a lot of degens and cyberpunk guys in crypto who believe, you do the right thing, like obviously this guy just hacked. He just stole millions of dollars from whatever protocol it happens to be, and just freezes coins as soon as possible. But they don't. But then they get a small little court order to attack a bunch of companies and they do so. I'd love to find the tweet, but maybe I don't want to look around. Let's do a quick look, see if we can quickly find it. I don't want to. Let's see. So let's go Zach. I wish I would have found it. Sorry I didn't find it beforehand. Zach XPT. Rolling down. Let's see. He tweets quite a bit, so maybe I won't be able to find it too easily. I don't want to search specifically. All right, I'm not gonna find it, but anyways, you can dig through. You can search through his Twitter and see if you can find where he talks about it. It's probably in a reply as well as not actually in a because there was some sort of announcement for it, right? But anyways, I don't want to like I said, I don't want to. Oh, here it is, right here. So how come Circle froze the USDC balance of 16 unrelated hot wallets late yesterday for a civil case? The basic review of the on-chain activity makes it obvious that they are operational wallets. You fail to protect users during actual incidences, yet respond to the request riddled with errors. So, I feel like it's not like Circle's not run by people who understand crypto very much. They obviously are successful. Like they know the game, and they're playing the game. But like a little civil case, and they freeze a whole bunch of wallets. But like someone hacks, hacks Euler or whatever, and pulls out massive amounts of USDC, and they just watch it move around. It's crazy. Moving on. So today is VE33 day. So Wednesday, get your votes in wherever you happen to have a VE NFT. Go and do it. But if you're on Ramses like me, you don't have to. You can just put it in the auto vote and it'll vote for you, and it'll liquidate your bribes to USDC or Hype or whatever it is you want your bribes to go into, or you can use Hyper RAM and buy back and build your position with your bribes. So take a look at that. Consider. I like it. Moving on. So here we have Ted. I always get a kick out of this. So this guy's such a troll, but he's got 280,000 followers. So can I really, laugh at him? He's, lots of people watching him. But here he is saying BTC's next dump is only a matter of when, not if. All because he drew two little ranges that are, that's the extent. This is the extent of his TA. Just look, it happened last month. Or I don't know the time scale on this. It's days. Yeah, look, it happened last month because I drew this. If you draw this angled box here, And I'm going to draw it now, and of course it's going to happen again because I'm drawing this angled range that's good. Now I understand TA has been a dominant way of people to predict the markets, and if everyone is using TA, then TA is functional and works because everyone's using it. So if everyone's using it, then it's like a self-fulfilling prophecy. Now, I'm not saying like TA is completely pointless. However, I don't really think what he's sharing is valid. Now, give me some reasons like why BTC might dump. Like, oh, there's a systematic problem with BTC, or all of these whales, they want to accumulate gold for whatever reason, or they want to get into T-bills. Like, give me actual fundamental logical reasons, and then draw your lines to try to predict when it might happen. Sure, but don't just be like, oh, it's inevitable because I drew these two ranges. But anyways, that's you. You can do you. You can bet on what however you think is valid. And you can copy trade Ted here, and he has more influence than me, so he might actually be. It might actually come true because of what because of his influential range. Okay, but I highly doubt it. But anyways, you do you. So here we have Protocol FX. Basically, they have renewed their partnership with this Hypernative Labs. I don't follow them, but I should probably. And basically what Hypernative Labs does, let me read what they say. Detect and neutralize Web3 threats in real time. 200 plus dApps, chains, wallets, and financial institutions rely on Hypernative to prevent hacks, exploits, and frauds. So yeah, so 24/7 threat detection and prevention across the protocol, smart contract vulnerabilities, operational security risks, financial manipulation, and other attack vectors monitored and mitigated before funds are ever at risk. 16 audits, 24/7 monitoring security compounds. So this is how we win. This is great stuff. This is how protocols are much better off. Like doing 18 audits obviously doesn't mean anything if your team can like lose control of their admin key and mint almost $100 million worth of unbacked stablecoins, right? Audits are pointless, but when you have a ongoing monitoring situation, and I would assume that Hypernative have some sort of panic switch on Protocol FX. I don't know. I should probably ask. Let me ask right now. Does Hypernative have a panic button for Protocol FX? Yeah, let's check. So I've added that to there. And so anyways, even if they don't, they're constantly monitoring things. They're watching for smart contracts that are deployed that would possibly interact with this protocol. And this is how I think this is valid. This is like a bug bounty in a sense, but it's like a security team. And they're not the only one. This isn't the only one they're doing. They are actually, monitoring many protocols, and they can see, compare these protocols together, the security features of those protocols. But anyways, you can check it out. I think it's worth it. I think it's a good thing to have on any protocol. So here we have Frax Finance talking about the Clarity Act. So the Clarity Act update hurts stablecoins built on passive yield, but it strengthens FX USD's position. If rewards shift to on-chain activity, that plays to your DeFi native strengths. FRX USD is a stablecoin people use, not hold idle. Frax is a bet on the growing FX usage. And then the retweeting Coin Bureau, which I have blocked for some reason. They probably shilled some shit coin or something in the past. It was an obvious paid shill, so I blocked them for that. But anyways, so the idea is that like the Clarity Act is trying to go through, and they're trying to like stop stop protocols, or stop specifically exchanges from giving yield directly to people who just hold USDC in their accounts. And I think it's kind of BS, because it's like, how is it like they have banking licenses? Why can't they give like USD, like give interest to their to their users. And it's all just like a bank. The banks are like, we can't compete, so we must stop them. We must stop them from giving the people higher interest than what we can give them. So we'll put a law that stops them from doing. That's what I see happening. Now there could be something else, but I don't see, like, obviously if all the banks, if there's a gigantic, ginormous bank run and everyone pulls all their deposits from, like, you know, all the TradFi banks, you know, shit's gonna hit the fan. Like the, you know, housing market will crash, the stock market will crash, things like they'll have to liquidate shit tons of, like, just assets that they don't want to liquidate, and you know they'll be liquidating a loss. Like it's like, obviously the government is in the best interest to protect the banking system to some degree. However, you know, like, basically what they could do is they could do something, instead of saying, you know, like, you can't give interest to the people who do this, then maybe they could do something like, you know, you can't advertise it. Like, you know, like the pharmaceuticals are not allowed to advertise in some places. You know, you can't put TV commercials saying, you know, come and take our Prozac, you know, or our antidepressants. Ask your doctor about antidepressants. You know, like this kind of stuff. Maybe they can have these, it illegal for them to, you know, put these kinds of advertisements for, you know, good interest rates for people, and have it only for people who dig deep, you know, and only people who are hungry and curious. Those people find out that those opportunities, and they might spread through word of mouth or through social media, but at least, you know, we can control the banks can't, though those, you know, centralized exchanges and stuff can't do it. Now, back to Frax Finance, a lot of what they do is on chain. And people are not just holding FXUSD, they're putting it in as collateral, they're lending it, they're putting it into markets, they're putting it to work. They're not just holding, like, idle stable coins in their wallet. Like I don't know who does that, but, you know, there are some people who do that, and I don't want to do that. But I think, you know, like Frax doesn't have to drop their interest rates, their APR, into people's wallets who are holding idle coins. They drop it into the positions that people hold. So if you hold, you know, staked Frax in your EtherFi vault, then you get interest dropped into there. Or if you have, you know, you're lending FRXUSD on Lamaland or something, then, you know, or maybe not Lamaland, but whatever, wherever you can lend it, then they're going to boost your APR with some more of their interest from their T-bills and their holdings and stuff like that. So anyways, I think there is that case, there is that thought as well. So check it out, dig deeper, of course, find out what Frax thinks, what Frax is doing about this Clarity Act. And it's very simple. You just go to the Frax Telegram and ask, and they will share it. It's a very lively and responsive community. Moving on, Banteg. So Banteg says something here, and I agree with him, disagree with him. I'm kind of like yes and no, right? So let's read what he says. He says 99% of the miladies I have seen never shipped a real open source project in their life. Instead of simply owning it and saying yes, there are all kinds of cope words salads now. Shipping nothing is spiritually pure now and not a failure. I'm taste formatting new Cephiric phase shift. So I don't really understand all of this. Like, I don't know who he's talking to, but basically there's two sides of this coin. Number one, there are miladies who are not, you know, stinking rich, who didn't buy Bitcoin, didn't buy hundreds, you know, thousands of Bitcoin at $10 each, right? There are a lot of miladies in that situation. So my point is, there are a lot of miladies who need to make some money because they're not stinking rich. Whereas Banteg, I think he is kind of stinking rich. So he, you know, when he decides to ship a public good, it's because he's doing it for the good of the space, but he's not hungry. So, like he has shipped several things, some stuff that I've often used, and he ships them for free and supports them and puts them out. The first one that I can think of is his Disperse app, which basically allows you to like take some tokens from a wallet and send them to many wallets with a single like transaction. And so it's a fantastic app. He's deployed it all over. I've used it many times, and I'm thankful that he has deployed that. He didn't tokenize it. He didn't sell it. There's no fees. It's just free, open source, public good, right? Now, he is talking about real open source projects. He might not be talking about unmonetized or projects that are public goods free to use. He's just talking about code that is not, gated or licensed, that you can just fork if you want, iterate on it if you want, and just use it as a growing of the ecosystem, like in an academic sort of mentality. Of course, you should reference or cite your source, like, special thanks to this milady for their code I have built on top of it, and here is my code, something like that. Or maybe even like a token share, like, I'm using his code, so I offer him some percentage of the token allocation, or something like this, right? Maybe that's what he's talking about. What he's saying is they don't even do that. They build projects closed sourced, maybe hidden, and so forth. So I don't know. I'm not an expert on this. I'm not following this aspect. I don't really know, but I hope he's not completely right. But I just wanted to share what he says here and put my thoughts on it as well. Like, people need to make money. People need to eat. So they need to do that. But should they, close source everything up and be like, if you want to fork me, you must pay. You must pay me. Like, have that instead of trusting that the forkers will do the right thing and share or at least cite. And I think that's that's unlikely in many cases. A lot of people steal people's tweets and don't cite them. So it's like stealing people's codes and making money is an easy thing for people to do. I think morally people will do it without any, like, certain people will do it without any kind of qualms. Just like, why not? Like, it's free. I'm going to use it, and then I'm going to make more money because I'm better at selling it, right? Anyhow, that's that. Let's move on from Banteg. Here we have Ceazor. So Ceazor, a long tweet here about Solana. So big personal news. First off, Ethereum is dead. Second, I am now a special situations at Solana Foundation. My mandate is mega deals that will drive max value. Why Solana? And then he goes into like why he has jumped ship and gone over to Solana. Everyone's retweeting this and talking about this and saying obviously they just paid you more money, right? But I don't understand why he has started his tweet with Ethereum is dead. Like, I did a little research on him to see, like, ask Grok what is his history. So he previously worked for Goldman Sachs stuff, right? And then he was head of risk at Euler Labs, leading to the protocol's major exploit in 2023. So he was head of risk at Euler Labs before they had a major exploit. Then he joined Athena, the USDE, right? And he was head of growth there. And now he has left Athena to go to Solana. So why doesn't he say Athena is dead or Euler is dead and that's why I'm going to Solana? Like, instead he starts his tweet with trying to trigger people. Like, I'm triggered as well, I guess, so I fell for it. And he's gonna take on this job at Solana Foundation. I've seen some tweets recently Solana's struggling with, the active users are only bots, and I guess they're grasping at straws and willing to pay this guy quite a bit of money to hopefully drag people across the bridge over into Solana to get scalped again or get skinned. I don't know. So you can read through his whole tweet and all the reasons he says. So he's like, what will I do at Solana? Bring 10 billion TVL to Solana. He's like, I brokered lots of deals. DM me. Help grow RWA perps on Solana. DM me. This kind of stuff. He's why Solana. It's the most engaged user base in crypto with the highest take rate per volume. More than hype. Coinbase, Binance Foundation is very lean and full of killers. The chains don't need other chains don't need me. Ethereum is fucked, stuck in communism. The hype perp game is mature. Solana is the perfect for me to have fun and get shit done. So like maybe he's got some good. I like this last part here where he says Solana is perfect for me to have fun and get shit done. So I really like that sentence there. I don't quite agree that Solana is the best place for him. However, I like that he's being honest about his motivations there and talking about why he wants to help out in Solana. Now, will he make the hugest difference? I don't know. I think Solana has a problem with they basically killed all their users. They scalped everybody. They extracted everyone's money, and now they'll have a tough time, convincing the people who remain in crypto to use it. Now, I do see a lot of people. It's money talks, and if you like, even if he were to like say to me, hey Ceazor, I want you to like deploy a DEX on Solana. Here's $50 million worth grant with like TVL commitments and protocol owned liquidity and stuff like that. I would definitely consider it. Like I'm not rich to the point where I can say no to something like that, but at the same time, I'd much rather not. I'm definitely not going to just go and deploy stuff there because I don't agree with the ethos of what they do there. They care only about money and about making money off of other people. So anyhow, that's what I think about this. I wish him the best, I guess, but I don't really know him, and we'll see. We'll see what happens. Let's move on. So DeFi Dad has a long tweet here talking about his podcast a little bit, but let's talk a little bit about what he says here. We're at the stage of the bear market where too many investors are now comfortable in stables, barely earning T-bill rates. Bear markets are where you make all your money. You just don't know it all the time. So he's quoting something, okay? The point of holding stables and earning yield is to buy blood and realize the greater return in the next bull run. Never lose sight of that. So here are some points that he says. Speaking from experience, here's what often happens. We assume more downside is coming. We defer the decision of where to deploy. We fear losing the cushion of the stablecoins. We forget the opportunity cost of being sidelined. And we tell ourselves holding stablecoins is the plan, which it is for a short time. But due to the traps above, it is something we tell ourselves as others biases clouds our decisions. So what is he saying here? He's not telling you to go and buy tokens, but he's saying don't be afraid to buy tokens. And I agree with him. Like if we go back to my chart here, the best way I can think of to buy coins is like if you are in stable coins, so put them into interest-bearing stable coins. In this case, I'm using USDS, and buy the dip, right? So I don't know, you don't know if the dip's going to come, but like you could just simply take your stable coins, go to the market price, put them all down here as a buy order, and then if the price goes down into these buy order, then you start accumulating some interest-bearing ETH or interest-bearing whatever coin you're looking to buy. Now, not all coins have interest-bearing positions, and especially ones that can be easily traded into. So be careful about that. Do some research. Make sure that you're not going to get jacked on price impact or something like that. But if you set up these range orders like I do on carbon, then you're setting a price. They might not get filled because nobody's willing to route your trade because there is no liquidity pools, and you're asking them to mint coins for you and sell them to you. But you'd be surprised on how easy it is for someone to say, hey, look, this guy's willing to buy my staked whatever, my staked shitcoin below the market price, and they will just execute it for you. They will just go and manually do it, or they'll have a bot that just searches and does this. So listen to DeFi Dad. Don't be all in dry powder all the time, but being in dry powder is not a terrible thing either. So yeah, think about it. Here we have Serpent. I talked a little bit about this yesterday, and I wanted to talk a little bit about this more now. Okay, so here we have Serpent Tax. He's replying to Murdoch. Murdoch is basically talking about how Ethos is being biased and slashing people. The head, this guy Serpent is weighing in, giving his opinion on stuff and swaying votes to slash people by giving his opinion as the leader of Ethos, and people are then following it because he's the leader. We should do what he says, otherwise we'll get slashed, right? That I think that's kind of the point, right? So then Serpent Tax replies and says, "Hey Murdoch, I appreciate you sharing your thoughts and opinions about Ethos, but you've shared multiple points of false information about Ethos that I'd like to clear up. Could you reply to my DMs, please?" So, Murdoch has 11,000 followers. Maybe he has more active followers than me, but he has less followers than me. I've several times tagged Serpent Tax and asked and given him suggestions, and maybe not a lot, maybe not enough to get noticed because of the algorithm, but I never get anything. So it makes me feel like if you want somebody to reply to you, if you want engagement from protocol leaders, you have to FUD them. And I find that this is a terrible thing about our space. If you say good things and nice things about protocols, the best thing you're going to get is a retweet, unless you consistently doing it, and you get noticed as a supporter. Then you might build a reputation or a relationship with those leaders because of you are OG maximalist, right, or a lover. But I think for the most part, if you want engagement, you just need to make up shit, lie, and FUD the crap out of some protocol, and then they will engage with you. And I find that to be saddening about our space. I find that to be a problem in our space that we should fix. So instead of him replying to him in public here, he should just ignore him and not. But I guess he's trying to defend his protocol and his protocol decisions, but he can just do that as a general statement and just forget about the engagement part of it. Now, I don't know Murdoch. I don't know if that's what he's doing. I'm not trying to paint Murdoch as the problem here, okay? I'm just trying to talk about my thoughts on what I've read here and what I'm thinking about while I'm reading this. So I don't mean to pick on Murdoch and call him a fudster and a engagement farmer, and I just followed him just to show that. But anyhow, I thought I would mention that, talk about this a little bit, and share that with you guys. So here we have a great tweet. So it starts with Scoopy, and Scoopy is retweeted by Chatsik ETH, and then Corn hops in and says, "We built this tool." So the tool is pretty cool. If you click on this tool, it basically goes to this website here. It's a multi-sig checker. There are some examples here. You can put in the multi-sig, and this protocol, this thing will analyze it. So if I take let's take the Ethereum let's do something that has powers. Curve finance emergency owner multisig. So I click on that, it analyzes it, and it pops out all of these things that multisig has the ability to do. So, signer threshold. So it's like, it says good signature. 5 signatures are required to execute transactions. That's 5 of 9 are required. Safety version. So it's a little bit out of date on the safe, but not terrible. Contract creation date, multisig nonce. So 10 transactions have been executed. And you can kind of go through and read like what can that multisig do and so forth. It's pretty cool. And of course you can paste in multisig addresses at the top and it will analyze them and kind of give you some ideas. But let's go to Scoopy's tweet here and read what Scoopy has said, because this is where the conversation kind of starts, right? So I've opened it up and basically Scoopy, come on guys. Waiting for it to load. So Scoopy has basically, gone through and talked a lot about the multisigs. So it's yesterday we did talk about like how I don't think we talked about this actually. So Gauntlet apparently had some power to pull to make a deal. So they basically, what happened yesterday was, how to explain this? They had bad debt. So instead of leaving the bad debt in the market, they basically bought the bad debt from the market. So they put in like money and they took the bad debt tokens out of the market, and now the multisig or the treasury holds those bad debt tokens and the users get their money back, right? Which is fantastic. However, what was highlighted was that this was done in a manner that was like kind of sketchy, in the sense that like they could pull those tokens out at any time. They could take ownership of those tokens, whether it was for whatever reason. Now, Shalag says it looks like it's an EOA. Gauntlet did reply back and say, no, it was a multisig. So no, it was still a multisig, but the point is still there, that they were able to take the money out, even though it's bad debt, they were able to take that money out and put other tokens in there. And that's scary, okay, with now they did use a multisig and so forth, but still. So Scoopy's talking about this kind of multisig stuff, and he's like, mark this safe, Aave governance, time locks on all chains, Lido, dual governance, 14 Oracle nodes, SkyMaker DAO, 7 years on-chain governance, Morpho immutable core, 5 of 9 multisig, Curve Aragon DAO, 5 of 9 emergency, Liquidity bold, gold standard, 0 admin keys, completely immutable, EtherFi time lock controller, balancer 6 of 11 with 3 of 7 emergency sub DAO, Euler sound architecture verified. We'll post more findings, and then you can kind of go through what he's been kind of digging around and finding who's got power to do crazy shit. And these guys look all good. Now, again, like I said, you can go to this. I will share this tweet here. I will actually share this one, and you can dig through this whole thread. I'll share corns, and then you can get that safe yaudit.dev tool, and you can kind of analyze projects, multisigs, and dig a little bit deeper and see what can they do, and so forth and so forth. Okay, so moving on from Scoopies, what's this? So horrendous take. So here's Bojan from Liquidity. He's sharing this thing. Okay, so it's like first. So horrendous search results on DuckDuckGo. So he's searching for cow swap, and he's like, the first 7 links are all scams, right? So cow swap, cow.net, cowv3.org, and they're all like phishing links and shit like this. So yeah, be careful when you're searching. This is why I love this thing here. It's called Llama Search. You can add it to your Chrome browser, and basically if I were to go here and I were to cow swap, and of course it's not loading this time, which is crazy. Let's go with Uniswap. Check price of Uniswap, open Uniswap. So you can see Llama Search is like a curated list of websites. So if I were to click open Uniswap here, it would definitely go to the Uniswap official website. Whereas I'm surprised CalSwap is not here. Come on, Xerox is not going to make it. Why is CalSwap not showing up? So then I have to use Google. But anyways, bookmark your shit, or, use this at least to search for stuff. I do have CalSwap here as I obviously go there quite often. So I can just click on this thumbnail and I know it's there. I think, just put Llama search into your browser and you will save yourself a lot of problems. Now you do have to use this search box here. You can't use the URL at the top. The URL is going to just use Google to search again. But it's a good point. Like, don't be very careful what you're doing. Now he does this, use searchllama.com as well. You can use that instead of whatever. So anyways, I thought I would mention this, talk about it, and share this with you. Be careful, especially when you're searching for links. You can't remember the link using Google or DuckDuckGo or whatever the heck you use. Okay, Stacy Murr. Stacy Murr is talking about something that's interesting here. I did reply to it already in text, but I thought I would talk about it here on the space as well, on the podcast. So it says, that's very nice of you guys to have decided to hide affected XUSD vaults from your V3UX, less stress for depositors, or what do you call it, Silo Finance. So the point is here, so Silos dropped V3 yesterday, and if you go to the V3 website, then you won't see any of the positions that you have that were exploited in the V2 protocol. Now, if I go to the V3 website here on Silo, I haven't double checked this. I am assuming this. If I go to Yearn, then I assume that all of these positions, all of these vaults are in fact V3 vaults. I believe none of these are V2 vaults. They're all new tech, new new stuff. And the V2 site is still here. You can click it and open the V2 site, and you can see those V2 vaults, which some have bad debt, some were wrecked by the XUSD markets and people lending to those and the stream finance stuff. So I'm not 100% sure of that, but I disagree with her calling them out, like saying, hey, you guys, why are you hiding this? Like, I believe the website should be segregated. Like, if you want to see V2 tech, you should go to the V2 website. If you want to see V3 tech, you should go to the V3 website. And I don't think they should incorporate people's V2 tech into the V3 website, because then people will not know that they are getting V2 tech when they are depositing through the V3 website. So I think it's right of them. Now, if I did say if they decide to stop supporting the V2 website, that's another issue. That's a serious problem, because I need to know that it will be there, because I do have some bad debt as well from that. So I disagree with her a little bit. She's kind of fighting it in the sense of saying that they're being sneaky and trying to hide it and trying to not show the truth of it. I wonder if she talks, and so she doesn't talk, she just shows. But anyways, so I thought I would share my thoughts on this. Now, maybe I'm missing something important here, because she doesn't talk maybe, when you go, it does say in her picture here, it does say she's got $0, but she's got a position that's getting 2,000% APR because of XUSD. I think that XUSD is toast and it's money lost, and we're never going to see it again. But anyhow, I hope I always hope, right? Moving on. So here we have Maddie. Maddie is talking about this. Let me read what he says. People who say buybacks don't work never control for the amount being bought back relative to the existing supply and inflation. No shit, your 0.0001% equivalent annual yield buyback doesn't work. So, yeah, people like to say buybacks don't work. Look at this price chart. But it's the price buybacks work when buybacks are more than inflation or circulating supply of dumpers. They work. It's a matter of will your buybacks work or not? Do you have enough fees to offset inflation and dumping? That's the question. That's always the question of whether or not buybacks work or not. So I thought I'd just share it and agree with Maddie here, and then I'll move on. So here we have Sonic. Sonic Sab says Sonic Scan is now back online and fully synced as of 45 minutes ago. So I did hear that like there was a little bit of problems with Etherscan type things. I can't remember. I think it was Lefticus. Lefticus was tweeted about it and saying, Etherscan has had some problems yesterday with indexing history, and it's the type of thing. It's like one of these public goods people take for granted and no one's paying for to some extent. Like Etherscan is getting paid by chains to deploy and to monitor and stuff like that, but it's not like the users are not paying to check the history. The ecosystem pays, but who pays the ecosystem? The users pay the ecosystem. So it is us paying. It's just we're not paying directly. But would you pay money to go and check Etherscan? Probably not. You would never use it then, right? Because you just use the front ends of stuff and just ignore it. So, but Etherscan is important, or some sort of block scout or explorer of some sort. These are important, and I think they are essential. So it's a tough one. Like, who should be funding this stuff? How is it funded? How do we maintain it? But so Sonic lost their Etherscan. Now I do think some other ones also did, but back online is great. Okay, moving on. Okay, so outside of crypto, sort of. This is Pierre Poilievre. Pierre Poilievre. So he's the opposition guy running for Prime Minister of Canada. Currently, Mark Carney is the Prime Minister, and he's the opposition. So the person who would replace him if the Conservatives were elected into office. So he went on Joe Rogan, and he had a long talk with him. I watched it. It was pretty good. It was interesting. But this little tweet here, or this little clip, you can watch it if you want. But he talks about the idea that inflation is not understood by most people. And the banks and the government, they use inflation to hide taxation from people. He uses the example that, if you have 10 apples, you have $10, $1 an apple. Now, if you have $20, that's $2 an apple, right? But you still have the same amount of apples. The cost of producing apples has not gone up. It's just the money is worth less. And the cost of growing apples, has significantly actually gone down. We can make everything much, much, much cheaper. However, the government has printed so much more money that the prices are going up. So I like the way he talks. He's very straightforward. He's logical. He's conservative. Now, will he fix it? Who knows? Can he fix it? Probably not. It's like a runaway train, and he's just one man, and the only thing he can do is maybe, pull a few switches and change the direction of the train, to slow it down a little bit. But yeah, it's really hard. It's hard to fix. But I respect the way he speaks and his common sense mentality towards this stuff. I do want to add that to this. So here on the other side, we have Mark Carney, his opposition, the person on the other side who's currently in charge. So there was a Air Canada crash, right? There was an airplane crash, and the CEO of Air Canada came out and gave a statement saying, all kinds of, this is terrible, we're sorry for the victims, all this kind of stuff, right? Normal CEO announcement of grief and sorry, basically, right? But he did it all in English, and he didn't do it in French. Canada is bilingual, French and English. All the politicians, or most of the politicians, can speak both languages. And so Carney came out, and his statement is he's disappointed that the CEO of Air Canada could not speak French, cannot support the French side. So this is the comment he has, and I feel like it's complete posturing. It's pointlessness. come out and like does it like it's like you have bigger problems to talk about. You have more important things to deal with than a CEO of an airline who doesn't speak French. Like it's just complete silliness and so forth. But I didn't listen to the video, but apparently he's like, you know, he should speak both languages. But he's a CEO. He's not required by law to speak both languages and so forth. Anyways, that's it for today. I hope this has been useful and interesting and worth your time. And thank you so much for listening, and goodbye.